Hi, good day. Today is the 18th of June 2009, and here we are with the Forexserve weekly update. This week we've seen, since the closure last week of the markets trying to gauge whether the US is really going to raise interest rates, and I think the discovery has been that the data has not really proven to be that strong for the Fed to really up the ante. And we'll know more about that in the coming week when we have the FOMC meeting. So therefore, the hype that was being built around stronger dollar based on the possibility of higher interest rates in the United States has since then tapered off, and we've seen the dollar lose across the board. But that does not change the overall background that we are noticing of people questioning the slide in the global markets, and there's a feeling that at some point there is a turnaround, and I think this time is about the time when it is likely to happen. So the markets are not really very pessimistic, and they're expecting the US to lead the world out of a very strong recession that we've seen over the last 6 months. So therefore, the dollar is likely to remain somewhat biddish, I think, going into the next week, and the theme of a stronger dollar is likely to gain more ground as we go along. In India, of course, the rupee weakened because it has been following the global dictates quite strongly, and also because the market felt that the stock markets were highly overvalued, and at some point they became quite peevish and they sold off, and the FWS has been also selling. So overall, combined factors of the stock markets being sold off and the dollar being stronger globally saw the rupee weaken. I think that trend might be in place for a little while longer. We now go into the charting section, and where we explain to you about some of the major indices. Thank you.
This week we are showing you first the chart of the dollar yen, and we see here quite possibly the formation of an inverted head and shoulder pattern, and right now we are witnessing the dollar low, the dollar lower here in the right shoulder really, and if we were to extend this further, we would expect this level to be somewhere close to 98.20 to 98.40 to be the neckline, which is the key right now as we speak. So we expect, and also we can see that the stochastics has come off, and it would possibly be by tomorrow, which is Friday, that we will expect the dollar to possibly base here and then move higher. Then we look at the INR overnight index swap for 5 years, and we note that the fall since the beginning of the year, the rise since the beginning of the year has actually capped somewhere close to 6.6% after the fall through the third quarter of 2008. It could mean that if the 6.6% cap is not taken out, there could be a peak here and we can see it lower. So our take is that with the inflation data as we saw today, which was in the minus territory, we can expect the OIS to ease off in the coming few weeks. So we had suggested that one could receive somewhere close to 6.5%. We then took a look at the gold chart, and we find that we have in the short term incidence of a head and shoulder pattern, and we've seen a classic return to the neckline as it were today. So if there's a failure here somewhere under this trend line, then we can expect the trend to follow lower. Thank you. and have a great week ahead.